Okay, welcome. You're listening because you want to stay informed, but let's face it, time is tight. We totally get that. So today we're going to cut through the noise. We're doing a deep dive into the One Big Beautiful Bill Act. This just got through the House, May 22nd, 2025. And this isn't minor stuff. We could be looking at a really massive shakeup of the U.S. tax code.
It's really striking just how comprehensive it aims to be. It was championed by Trump and the House GOP leaders. The idea, they say, is economic stimulus, tax relief. But it's also got these pretty significant social policy shifts baked in that makes its path forward.
Well, interesting.
Exactly. So our goal here today in this deep dive is to really, unpack the main bits, especially the tax changes that pass the House. Then we'll look ahead what happens in the Senate, because that's a whole different ballgame.
Right.
By the end, you should have a much clearer sense of what this could actually mean for you, for your wallet.
Go ahead.
Okay, so let's jump in. The big one first, making those 2017 tax cuts permanent. Yes, that's absolutely fundamental. The bill locks in those lower income tax rates, the double standard deduction, everything from the TCJA, basically. Remember, those were all set to expire after 2025, so this makes them, well, permanent.
Okay, so on the face of it, that sounds like, just lower taxes for a lot of people, ongoing. But who really benefits most when you dig into it?
Well, the lower rates do apply broadly, that's true,
Yeah.
but the structure of those original cuts means that higher income folks tend to see a bigger sort of proportional benefit. And the big question here, long term, is the deficit impact, making these permanent. That's projected to add quite a bit to the national debt down the line.
Yeah, that's a huge long-term consideration. Okay, so we have the permanent stuff, but there's also some new stuff, temporary changes. Talk about the standard deduction boost and the child tax credit.
Right, so for a specific window, 2025 through 2028, the bill adds an extra $1,000 to the standard deduction for single filers, $2,000 for joint filers. And at the same time, the child tax credit, the CTC, gets a bump up to $2,500 per child. Again, just for those 4 years.
So that's more immediate breathing room for families, yeah.
Precisely. That's the goal. A more direct boost for households short term. But, and this is really key, it is temporary. After 2028, the standard deduction snaps back. The CTC also drops, though it does get indexed to inflation moving forward, which might soften the blow depending on inflation.
Yep.
But yeah, it definitely raises that question. What happens when these expire? Is it effectively a tax hike if they don't get renewed?
Right. The whole temporary thing makes long-term planning tricky. Okay, now let's get into one that always sparks debate. The SALT-T deduction. State and local taxes. It's back. And bigger.
That's right. Politically charged, this one. The bill raises the cap from the current $10,000 all the way up to $40,000. But there's an income limit. That full $40K deduction is only for households earning up to $500,000. Then it phases down for higher incomes.
Okay, remind us, who's most likely to feel this change? Who benefits?
It's mainly taxpayers in states with high state income taxes, high property taxes, the ones.
New York, California.
New York, California, New Jersey, exactly. For people there, that $10,000 cap really limited how much of their state and local taxes they could deduct federally.
But it's not universally loved, is it? There's that argument about fairness between states.
That's definitely the pushback, yeah. Especially from fiscal conservatives. They argue it's basically a subsidy for high tax, often Democratic-leaning states, paid for by everyone else. They sometimes call it a blue state bailout.
Okay. Let's shift gears a bit. There are some specific exemptions in the bill, too. Tips, overtime pay, car loan interest. What's the idea there?
Yeah, it's an interesting mix of things. And like the CTC boost, these are also temporary, set to expire after 2028 currently. So the proposal makes tips exempt from federal income tax, big deal for hospitality workers, same for overtime pay tax exempt, and also the interest you pay on car loans. Add it all up. For some people, depending on their situation, it could mean savings up to like $760 a year.
That feels pretty tangible for folks in those jobs or, anyone with a car loan. Any potential headaches with these? Implementation, maybe?
Well, potentially for the IRS, yeah. Tracking and verifying these could be complicated. Tip reporting, for instance, is already complex. And, of course, while it's tax relief for some, every exemption means less revenue coming into the Treasury, so there's a cost.
Always a cost somewhere. Okay, moving up the income ladder now. Estate tax changes. What's happening there?
Right. This affects very high net worth individuals. The bill proposes increasing the estate tax exemption quite a bit, up to $15 million per person. That's up from around $13.6 million now. And like the current exemption, it would adjust for inflation each year.
15 million per person. So far fewer states would pay any federal estate tax, and those that do pass on a lot more tax-free.
That's exactly it. It's a direct benefit for the wealthiest families, allowing much larger inheritances without federal tax hitting them. The debate around this obviously centers on, wealth concentration, fairness in the system.
Right. Okay, another targeted one. Help for small businesses. There's an enhanced deduction.
Yes, for what are called pass-through businesses. Think LLCs, partnerships, S-Corp. These are businesses where the profits, they pass through to the owner's personal tax returns. The bill increases the deduction they can take on that qualified business income, the QBI deduction, from 20% up to 23%.
So the goal is, what? Encourage entrepreneurs, boost small business growth.
That's the stated aim, yeah.
Yeah.
Give them a bit of a tax break to hopefully stimulate investment, hiring, that sort of thing. The flip side, as often happens with these targeted breaks, is added complexity. More rules for businesses to figure out.
Always more rules. Okay, now this next one is totally new, getting a lot of buzz. MAGI-A savings accounts. What on earth are those?
Yeah, this is a brand new proposal. It would basically create a $1,000 savings account managed by the Treasury and tax-free for every child born between 2024 and 2028. It's being billed as, pro-family, giving kids a financial head start.
$1,000. Sounds okay, I guess. But what are the catches or criticisms?
Well, critics point out that $1,000, while nice, is pretty small potatoes when you think about, say, college costs or long-term needs. Plus, the proposal as it stands doesn't let parents or anyone else add more money. And it's not clear how the money can eventually be used, so limited flexibility.
And it's only for kids born in that 4-year window.
Exactly. That temporary nature is another point people raise.
Okay, one last big tax change to cover. The remittance tax. This sounds potentially controversial.
Oh, definitely. This is a big one. The bill introduces a new 3.5% federal tax on money people send from the U.S. out to other countries, remittances. The stated goals are, 1, discourage money from flowing out of the U.S., and 2, raise revenue for domestic stuff.
Who does that hit hardest?
Primarily immigrant communities here in the U.S. who send money back home to support family. There's a lot of concern it could be, regressive, hitting lower income folks who rely on sending that money. And then there are the potential ripple effects, international relations, economies in those receiving countries.
Yeah. Sounds like it could have wide-ranging impacts. Okay, so that covers the main tax stuff, but the bill isn't just taxes, right? There's other policy in there, too.
That's right. It's not just taxes.
Yeah.
It also gets into social program reforms. Notably, it tightens work requirements for people getting Medicaid and SNAP benefits food stamps. The expectation, or maybe the intent, is that stricter rules would mean fewer people qualify for those safety net programs.
And anything else? Energy. Education.
Yep, touches on those too. It includes rollbacks of some clean energy tax credits, ones that came from the Inflation Reduction Act. It also puts a new tax on the endowments of large, wealthy private universities. And there's a provision about potentially pulling tax-exempt status from nonprofits suspected of supporting terrorism.
Wow. Okay, so it really does reach into a lot of different corners. Now, it passed the House, but the Senate, that's where things get really interesting, right?
Yeah.
Totally different dynamic.
Absolutely. The House vote was pretty much along party lines, but the Senate,
Yeah.
slim Republican majority, you've got key moderate senators, swing state senators. It's a much tougher path. We should expect, significant debate, probably changes.
Okay, let's game it out. That salt-out deduction increased the $40 K cap. Given the pushback we already talked about, what are its chances in the Senate? Does it survive?
It's going to face serious headwinds, I think. Senate Republicans, especially from lower tax states, are likely to push back hard. You'll hear those same arguments. It helps wealthy people in blue states. It's not fiscally conservative,
Yep.
all that.
So what happens? Does it get cut?
That's a strong possibility. Maybe they lower the cap significantly. Some talk about maybe $20,000. Or they could make the income phase out much steeper so it benefits fewer high earners. Or maybe it gets scrapped entirely, though that might cause problems with some GOP members from those high tax states. It's tricky.
Yeah, politically tricky. What about that remittance tax, 2.5% on money sent abroad? Seems like that would generate a lot of opposition.
You'd expect intense lobbying on that one for sure. Business groups, immigrant advocates, maybe even foreign governments quietly making their concerns known. The arguments against it, that it's regressive, hurts diplomacy, maybe even violates trade agreements, will be loud.
So could the Senate just kill it?
Very possible. Or maybe they reduce the rate. Maybe they carve out exemptions for certain countries or certain types of transfers. It feels like one of the provisions most likely to be changed or removed.
And the overall cost, that $3.8 trillion added to the deficit, That's going to worry some senators, even Republicans, right?
Oh, absolutely. Deficit concerns will be huge in the Senate. You'll have deficit hawks in both parties raising alarms. So you might see demands for more offsets, maybe making more provisions temporary using those sunset clauses, or finding other revenue-closing corporate loopholes is often mentioned, maybe even trying to link it to caps on future government spending.
So more temporary fixes potentially. What about the energy stuff, rolling back the clean energy credits? Will that fly in the Senate?
Probably not entirely smoothly. You've got senators, even some Republicans, from states like Arizona or Michigan, maybe Georgia, where clean energy is actually becoming a big industry, creating jobs.
Right.
They might balk at a full repeal. So maybe a compromise. Perhaps some credits get restored. Maybe they keep incentives specifically tied to manufacturing the tech here in the U.S., something less drastic than a full rollback.
Okay. And the MAGI savings accounts. That $1,000 for newborns, is that likely to change much? Seems kind of small ball compared to everything else.
It does feel a bit symbolic, yeah.
Mhm.
In terms of budget impact, it's minor. Maybe the Senate tweaks it, broadens eligibility slightly, tries to integrate it better with existing things like 529 college savings plans. But honestly, with all the fighting over the bigger ticket items like salt and the deficit, this might just pass through relatively untouched or get dropped as a bargaining chip.
Makes sense. Lastly, those stricter work requirements for Medicaid and SNAP. How does that play out in the Senate?
That's likely to hit a wall of opposition from Democrats, obviously. But also, some moderate Republicans might be uncomfortable with tightening requirements too much, especially thinking about the impact on low-income folks back home.
So potential for them to be softened?
I'd expect so. Maybe the requirements get watered down, or maybe they're traded away entirely in negotiations for something else. It's a classic pressure point.
Okay, so pulling back, it really sounds like the Senate's going to be where the action is. Compromises seem inevitable. What does this bill, as it stands now, tell us about the bigger picture, the sort of governing philosophy?
Well, the House version, it definitely carries forward those Trump-era themes, right? Tax cuts is the main economic lever, deregulation, trying to shrink social programs. That's the core. But then you have these sort of populist additions layered on the tip exemption, the MOG accounts. It's a blend. And the fact that it's facing such an uncertain Senate fight just highlights the ongoing disagreements, even within the Republican Party sometimes, about priorities and how to govern.
And those really hot-button issues, SALT, the remittance tax, the welfare changes, those seem like the ones to really watch. They feel like they have to change for this to pass the Senate.
Absolutely. Those are the lightning rods. They're where the most intense negotiations will happen. Senators will be trying to hammer out a version that can get, at least 50 votes, maybe using reconciliation rules, or potentially even find some common ground to get past a filibuster, though that seems less likely given the content.
So bottom line, pass the House, but the final version, still very much TBD.
Exactly. House passage is step one. Step two, the Senate is where the bill gets reshaped, potentially significantly. It all hinges on those negotiations, political pressures, and frankly, the budget math.
Now, this has been incredibly helpful, really breaking down the one big, beautiful bill as it heads into that Senate gauntlet. Hopefully this gives you, our listeners, a much better handle on what's actually in it and what the fights are going to be about.
Yeah, and maybe start thinking about which of these changes, if they happen, would actually hit closest to home for you, for your family, or your community.
Definitely. We absolutely recommend keeping an eye on the news, watching how the Senate takes this up. The final bill, if there is one, could look quite different. And maybe here's a final thought to chew on as we wrap up. With these kinds of potentially massive shifts being proposed for taxes and social policy, what sort of long-term adjustments should we as individuals, as an economy, be thinking about, regardless of how this specific bill turns out?